Bell, and joining us next is Tushar Pradhan, Director of Hexagon Partners. Tushar, thank you so much for joining in. First and foremost, we'll talk about, of course, investments and portfolios, etc., in just a bit. But what have you made of the market's mood and character last couple of days? I mean, it's after a very decent comeback from the lows through much of April, May, half of June. Suddenly, the market's getting into this limbo mode, a bit of a logjam of sorts, extremely quiet. What do you make of it?
Well, I think on the surface, just like in the sea, maybe it looks a little calm. But there are many stocks which have seen significant movements underneath. So individually, stocks have either gone up substantially over this last week or they have come down substantially. So there is, on an average, maybe a calm that we can see from the visible, average. But I think there is some action otherwise. But I think the main reason for maybe a hesitancy or maybe a lack of direction could be because of this overhang of the trade negotiations which are happening. And one of the things which I have been highlighting for some time is that it's not about the trade negotiations per se, but how will the global supply chains actually change in response to finally when people come to know what the tariff rates are going to be across the world, which as of now, which we don't know, and they keep getting postponed. So July 9 was supposedly the first deadline, and now it is going to be shifted a little further. So the level of uncertainty continues to remain very high. And as you all know, markets don't like uncertainty. So it's one of those things which probably could be an answer to your question in terms of why the markets have just kind of become subdued a little bit, because now the wait is a little longer. I think that's one of the reasons which I can come up.
What about the Jane Street impact on the markets? They were the market maker for many trades, especially on the derivative side. On the other side of the trade, they were always there with the kind of volumes and liquidity they provided. And now that just seems to be absent. Is that a big factor? And how will it impact the markets going forward? What are the implications of SEBI's interim order?
See, these are issues which, at least at my end, I don't have much data in terms of knowing what is their participation. And if that is one participant, there may be so many other participants which we clearly don't have any data on. We all know that markets are, a function of demand and supply, in addition to the fundamentals that we look at over the longer term. So in the interim, if there is a change in terms of activity or by way of participation by these very large participants, or as we call it, the big whale traders, then it is going to have an impact. However, as I said, we don't have enough information to decide whether this is going to have an impact on other big traders or the fact that the volumes are going to go in one direction. I think overall, if you concentrate on the fundamentals of an economy, the traders are going to be at a second derivative of your base economy and your base market, right? And they will keep changing from time to time. So I won't read too much in terms of what's going to happen immediately. I think focusing on the long term is something that we continue to do, and I don't think there's any change in that picture.
All right. Hi, Tushar. Good afternoon and good to see you, Ben. What about the consumption theme? Some of those stocks have given you zero returns in the last 5 years. But now suddenly the street is getting a little bit optimistic. And mind you, the bluest of blue chip names have not given you returns, while the markets have compounded by more than 15-18% on an annual basis. It's time to look at them. Indians are going to have more amount of money in their hands. Input costs are hopefully going to cool off. And the hope is that, consumption will go up. Your take?
Yeah, that's an interesting question, Nigel. I think when you look at an economic cycle, you have to remember that, there are certain kind of companies which take center stage, and then they hand the baton over to another set of companies, and then another over the entire cycle. So it starts with, a capital cycle. It starts with a capex boom, where there is a significant increase in production facilities, and essentially manufacturing as a base across, either driven by demand or the fact that there is credit available, and that leads to a capex cycle. Now that is followed by significant increase in employment across the economy as a direct result of this increased investment. And then that leads to increased incomes. And of course, India being an agrarian economy as well, there's a combination of rural and urban, which adds to the general demand going forward. And once you have this cycle of increasing incomes leading to consumption, we have a lot of pent-up demand, which first of all comes in what we call as discretionary, which is more to do with items which are more sustainable, like a capital asset or a appliance for most people. And then that is followed up with what we know as FMCG across the economy. So there are certain phases that these companies do well. And as we all know, FMCG largely is a defensive sector where we see a level of consumption no matter where the economy is. So we've seen our economy at a very significantly high rate of growth in the last 3 or 4 years, where consumption really comes as a significantly smaller portion of the growth in the overall economy. And as a result, obviously, the stocks haven't done much. I think if we continue to remain optimistic about our economy and the growth going forward, consumption, I think, is going to remain fairly small as a percentage of the overall growth, given the fact that most of these companies already trade at significantly high PEs. So I fail to see whether you're going to see a FMCG-led boom or that these companies will start making significantly positive returns from here.
Okay. So that's on FMCG. And finally, Tushar, I mean, before we let you go, just overall, given everything that's happening, we're running into earnings season. Just in terms of the total portfolio construct, right now, what would be your top 2-3 themes?
So I think we continue to remain very, very positively inclined towards capital goods. Essentially, I would think mainline manufacturing going forward, including process industries. We've seen a little bit of a lull in the last year, even the financial year ending FY25, where we saw a little bit of a tapering off in terms of ordering, whether it was from the government capex side or the private capex side. Interest rates were also significantly higher than what most expectations were. So there was a little bit of a bottleneck in terms of incremental capital addition. I think the current moves and the preemption from the RBI in terms of CRR cut, along with an expectation of gently falling interest rates into the future, I think manufacturing and essentially capex-driven capital goods is where most of our expectations are very, very keenly at. This is, of course, followed by the fact that we are going to see significant infrastructure growth, which is a continuing feature, which again had a little bit of a lull last year due to election activity and generally reduction in activity overall. I think all of that will lead to even auto to a certain extent doing well domestically. Now, this may not tally with trends globally, but I think our economy is pretty much on its own steam. So I think a little bit of auto, discretionary, capital goods, infrastructure, this is really where our keenly focused sector bets are likely to be. I think secondarily also we do tend to like the capital goods down in the machinery side. So we are talking about capital goods which are in the power transmission, that capital cycle as well. And I think that is really, again, something which is likely to pick up. Again, where we saw a little bit of a lull, both from a stock price perspective as well as volumes perspective.
Tushar, always good to hear your thoughts. Thanks a lot for joining in and giving us those details. Wishing you a good day, good week ahead as well. We catch up soon.